What is going on, everyone, and welcome to the stream for those listening on Facebook, YouTube, and Twitter. And how is everyone doing on the Discord? We got the PBU alumni Discord going on with our chats. I will be checking out all the chats. The name of the game for this stream is going to be education, and honestly, just your questions. We're here to answer it. This is definitely all about like customization of questions. No such thing as a bad question. No such thing as a dumb question. We're here to answer them for you. And I'm here with Pookie's Revenge. How are we doing, Pookies?
Good. That music hypes me up every time.
I know, right?
Just to add to what you just said, every time you guys ask a question, even if you think it might be something simple or silly, it helps people. It helps somebody else who might have been shy or ashamed or didn't even think to ask it. So feel free to ask. That's what we encourage. I know a lot of other Discords kind of crap on people when they do that, but we want you guys to learn. So So please ask. Where there's no holds barred, as long as it's not something crazy like hate speech or something like that. We got to follow the rules here, but ask away.
Definitely. And for today, we are, like I said, we're going to be answering as many questions as y'all have in the Discord. This will eventually be a PBU alumni only stream. We'll be going over how to become a PBU alumni in a little bit, but let's get right into the education. So as we go along, any questions that come up, I'm going to be interrupting Pookie basically and be like, hey, got a question from the member. That's what we're here for. Because Pookie is like an encyclopedia of knowledge. He can just go on forever and ever when it comes to education, which is why we love having him here. He's actually a developer now. He's a jack of all trades. Right now he's doing a lot of dev work, so we don't get him on stream very often. So we're gonna take advantage of this. So for now, let's just talk about Pookie's just different swing positions that you're currently
dev
in.
work.
There's your dev work. Showing off all your X, Y's, and A's and B's and all that stuff.
Yeah, I would much rather be trading.
I know. I hear you when you're doing all like the stuff, like you're like cussing up a storm in our chats, in our voice chats. But so during the stream, we'll be talking about Pookie's swing positions, his alerts that he's currently in, why he got into him, kind of like what his thinking was, how he entered them, kind of getting in the head of Pookie's Revenge and in the head of a veteran trader. And we'll also be talking about some, maybe future alerts he's maybe looking at, as well as just, like I said, education. It's all about the whys, the hows, as far as this stream goes. So Pookies, what are you looking at currently there?
This is BIOR. This is a therapeutics company that is obviously in a major downtrend, which is okay because that's the nature of these types of stocks. Doesn't mean we can't make money on them though. So that's why the trick here is to not marry these. Just play the volatility and get out in most cases. Obviously, if there's a pending, like an FDA approval and it's a pretty significant thing, like an orphan drug treatment or something like that, then it might be worth holding on to. But as soon as you no longer identify that continuation, you don't have to stay with the stock. You can lock your profits, walk away, move on to the next. And that's typically where a lot of people get burned on biotechs and low float stocks, low valuation stocks. They just don't really know when to cut and when to lock in those profits or losses. And then obviously we know the cycle of compromise tends to exacerbate that and make it worse. And then that just piles on the stress, makes us be more impulsive, take bigger risks. And it just, every single trader has probably had this problem and blown up their account a couple of times. So we can avoid that, or at least minimize it by identifying risk factors ahead of time so that we're not blindsided by what we don't know, right? So this one actually hit target this morning. First target here. I kind of bought with unsettled cash on this one, so I'm going to have to wait till tomorrow, which is okay. I still identify some pretty good continuation on this one. We have good sustained volume on the short scale here. We've got obviously this big surge of volume on the 10th, and then we got a little pullback here, this nice, beautiful retracement here. If I draw the fibs on this one, you can see we're right around the 61.8, which is the golden mean. That's a healthy amount of sellers to buyers, so it's starting to pull back up. So I am pretty confident in this one going to target 2. But we'll see. We'll have to see. We're heading into the last half of the week and blah, 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 right?
What's up, Pookies? Like I was saying, I am going to interrupt you whenever we do have a question. We have the first question here from Facebook user Uncle Paul. They said, I bought 13 call contracts for PRTY, that's I believe Party City, on Webull that expired in March. Is there any way to sell it since it's been delisted?
That is a good question with a horrible answer. Let me do one thing really quick. So last I knew, I'm gonna pull up the SEC filing here just to make sure. I believe they were already on track to be delisted, and when they were, oh, you got a hot mic there?
Yeah.
Oh, I thought somebody had a question.
Yeah, that's the answer. If you do have a question, let us know in the chat. Or if you do have a hot mic, we're just going to mute you for now.
Yeah, we'll take it right back off. We just don't want like personal stuff getting on the stream by accident.
Right.
So
by the way, for those of you who are listening on Facebook, YouTube, and Twitter, we are also on the Discord. So any alumni, and we will be talking about that in a little bit, they do have access to the voice access as well, to be able to ask questions. So that's what you're hearing when we were talking about hot mic.
Yeah. And we've heard some stuff. Okay, so basically what happened with this company is they filed for Chapter 11, which is bankruptcy. Part of that, there's what's the best way to explain this without going too deep down the rabbit hole? So when a company files for Chapter 11, it's not necessarily just saying it's going to go out of business and liquidate everything. There's a court process in place. If the company is able to restructure and survive, that's encouraged. Otherwise, the court usually orders them to liquidate through a third party. They have to pay off any debtors they have. And when it comes to shares, there's a little bit of gray area depending on what happens. So last I knew, the shareholders were not entitled to compensation for this particular stock. It may have changed. That's why I'm kind of skimming through the SEC filings here just to see if that's changed. The verbiage on the original notice that I saw was kind of, it was, I can't think of the word off the top of my head. Maybe one of you guys will know it. It was like a contemplation of obligation or something. I don't remember exactly which word it was. But it wasn't clear whether or not the shareholders would be compensated or not, but the inclination was that they would not be compensated. So if you have contracts, those are most likely gone because you can't distribute those through the CBOE or the option chain is dead at this point. And if it weren't, there would probably be nobody to buy it, right? So unfortunately, contracts, I believe, are just dead in the water. I don't think there's any way, even if you had an OTC broker and you were somehow able to access that, you're not going to find a buyer at this point, unfortunately. As far as the shares, unless something else happens, I don't believe you're going to be entitled to compensation for those to liquidate them. But there is also an opportunity, there's a chance that they may enact that, or the company might on its own behalf. Usually it doesn't happen, but I'll keep an eye on this one. Maybe Lee is kind of more in tune with this one. I just what was that?
Yeah, I know it was in the Discord. We're saying it moved over to OTC as a TK23 was saying PRTYQ.
Yep. Okay. So if you have an OTC broker and you have access to PRTYQ, you can. I just don't think the contracts will be accessible. Oh, nice. Okay. Yeah, bankruptcy plays have huge potential and obviously huge risk. So if you guys can trade those and get some good pops on those, that's the way to play those.
Yeah, TK23 said it's actually up 11% on the day.
Nice. Yeah, and again, this is something you don't typically want to marry for obvious reasons. We saw that also with Medley. It just kind of halted and just disappeared, right? But there were some nice pops after it went OTC.
Right.
Yeah, so that was a good question. Short answer, just I don't think you're going to get your money back on the contracts personally, but if you can trade the shares on OTC, you might be able to recoup some of that. Or more importantly, for risk management, there's always better opportunities. You can always make that money back.
Right. There's always the next trade, and obviously it's all about learning from the past trades when it comes to that. So Uncle Paul, if you have a follow-up, definitely let us know in the chat. Yeah. But Pookie, so back to what we were talking about, some swing plays you're currently in, and what's going on, Debo, in the Discord. And like I said, anyone who has any questions, Facebook, Twitter, YouTube, or Discord, please let us know. Facebook user doesn't say who it is yet, and it'll pop up in a second. There is Ronnie Moore is asking, how did you find have such a Twitter, I'm like hashtag. Where did you find ticker symbol BIOR? Yeah.
Well, that was right here on the website. So this is our website. I'm just going to go ahead and log in. I'm not going to walk through the whole process like I usually do for finding the alerts. And I wanted to really focus more on how I process the alerts for this stream rather than just, what I look for, right, in the alerts themselves.
We're gonna get in the brain of Pookie Revenge.
Yeah. So in this case, this is one I believe Lee put out. So I'm just going to type it in here. Oh no, it's Amy. Sorry. I think we traded this twice. Both times were Amy. One was a day trade, once as a swing. So she put this out on January 23rd at 5:02 p.m. This is Greenwich Mean Time, so it's 5 hours off from the East Coast. So she put this out. Entry was 433. First target was 475. That hit this morning. Second target is 550. That's the one I'm personally holding for. Stop loss is 393. So basically, that's the lines that I have drawn here. So 393. 550 second target, 475 first target. Again, that hit this morning. I'm just choosing to hold it for another day. And that's it. That's do have to get her to update that it would hit target though. So maybe that might have been a little server issue that we had. But the initial upside here was 9.7%. The initial downside, the overall risk here was 9.24%. That's from entry to first target, and then the stop loss for the downside. Giving us a ratio of 1.05 to 1. So that means that for every $1 that you risk or 1 unit that you risk, you're potentially getting 1.05 in return. I typically prefer to do 1.5 to 1 or greater. Amy has an exception on this one. So when you see something that's less than 1.5 to 1, you just got to be a little more cautious about maybe moving your stop loss up.
Pookie, it's me again, here to interrupt you. So we have another question, and this one, and I want to get back into BIOR in a second, because I know like this is definitely part of the the main class BIOR, and that is a really good question, by the way, from I believe it was Ronnie, and we're gonna get back to that. But first, Big Daddy Mouse was asking, this is in the Discord. They were saying, can someone explain why a stop loss would not have triggered? I posted in Profits what happened today. So it's Big Daddy Mouse and Profits. If you want to look that up, or if you just want to start off just by answering the first question, why would a stop loss? Because we keep talking. Stop loss is a great way to limit risk, but there are different reasons why it might trigger. And what would those be, Pookie?
Yeah. So first off, Big Daddy Mouse, it's awesome. I had a chat with him.
Oh yeah.
The other day. He's a good guy. So let's go ahead and take a look. There are a couple different conditions under which a stop loss will execute, but it's important to understand what they are. So basically, when you place a stop loss, I don't currently have one on this one because I'm holding it. I do have one on the other trades here. I have little bracket orders set up. I converted these to limits because it's the end of the day, and I don't want to have to rely on bracket order firing off outside of market hours. And the reason for that is because when you place a stop loss or a bracket order, they're based on market price. And because of that, they're not going to execute outside of market hours. So basically, what happens is if you have a stop loss here, right, and the price hits down here, after hours, maybe in the morning, it dips all the way down to here, and then it comes back up and it sits right here, or maybe it shoots way, way, way down here before the market opens, your order will become active, or it will try to fill down here because this is the current market price. So that's the danger of stop losses. And that's why I personally prefer to use like alerts. There's a couple other programs out there that'll let you monitor stock prices after hours. And then once they hit below a certain level, it'll let you know so that you can manually exit that rather than waiting till the next morning and seeing if it came back up or not, because that doesn't feel good. I'm not sure what time that happened. Let me get back to the chat so I can see if maybe you've responded.
Yeah, there was. Did you look at the profits? I'm actually about to look it up right now. They said,
yeah, it's got a screenshot there, and
gotcha.
Yeah,
the market was open. It just never executed. They said.
Ooh, that's rough. So another item, it just might be the order size, liquidity. They try to fill them. They try to match them as effectively as they can, especially during that auction cross window, right when the market opens, the 5 minutes leading into that. It might just be a matter of liquidity. I'm not sure what stock it was on. If it's a super low float stock, you might have just not found something until that happened. I know. Oh, INPX. Okay. Was this one a drastic? Yeah, it might have been during this. If a stock is moving rapidly, like let me just draw this out. It's probably easier if I draw it. I like to draw.
I was about to say you love drawing. It's so funny.
Right. So here's the current price. Okay, just theoretically here, the stop loss won't be active until it comes down to this level. Okay, once it hits this level, this think of it like a limit order. Okay, it's just kind of sitting there waiting for the price to hit it. Once this happens, once this condition is met, this then turns into a market order, more or less. Now we know that market orders have some variance on where they get filled, and that's based on how fast and how far apart the bid ask is. But if the price continues to drop faster, your order gets added to a queue, and then it just kind of fills when it does. So it might not fill until down here, even though the stop loss triggered here. It might not fill until much lower, or it might even come right back up and just fill at the stop loss. Sometimes it can fill above, which is very rare. That's typical only when you see those really potent dip and rips. But they tend to fill right above that if they do, not like up here or anything. They don't typically go very high. So that's kind of the nature of stop losses. And anything that's not a limit order kind of behaves the same way. So if you've got a take profit stop loss bracket, both that take profit and the stop loss are only going to become active when the market price meets or exceed that level. As far as INPX, let's take a look at the float. This is a very low float stock. There's only 3 million shares. So if you're trying to get filled for, I don't know, 50K, it's going to be tough, right? Because there's low liquidity there. There's fewer shares to move around, and there's going to be more variance on the price at which they're filled. So you're likely going to get hit with a bunch of partial fills. And depending on which broker you use, you might have a fill or kill. There's 6 different order types within the order types. Fill or kill specifically means that if it can't fill the entire order, it will kill it, which means you don't get partial fills and stuff like that. So if it's Webull, they typically tend to fill partials all the way down, all the way back up, wherever it can. I'm assuming this was a liquidity issue. I'm just not sure. If you look at the volume throughout the day, there's pretty significant in relation to 10K. This is a 3-minute chart, so figure you've got maybe an average of like 70. Let's turn on the volume. Let's just see here. Yeah, the average volume is about 120, 130K. So in the daytime, like afternoon, it was about 300K. So that's pretty good. I'm really not sure why you didn't get filled on that, other than just maybe that liquidity situation. Yeah, it just didn't trigger. Could also just be a broker glitch. That happens sometimes, unfortunately. That's why I don't use Robinhood anymore. I lost thousands and thousands of dollars because they couldn't program it right.
Well, I know, stop losses for when you're already in a trade. We have Cloudy Farms Genetics. I love some of the usernames that we have here. But Cloudy Farms Genetics was asking on the Discord. They were asking, this is a great question. I know a lot of people also have this question. How do you figure out an entry point, and what do you usually use to determine your stop loss or exit point? And I know there's, each trade is going to be different, but when it comes to these swing trades that we're talking about, like BIOR, the ones we're going to be talking about as the stream continues, what is your general rule of thumb? Are there any, red flags that you no matter what, you won't get into it? And what do you look at, to answer his question or their question?
Yeah. So really quick, there's a question by Darvon I want to answer first. Yeah. He said, I lost you guys on Telegram. Yeah. I don't know what happened. How do I get you back on there? This group originally started about 3.5 years ago on Telegram, I believe. Or no, I think it was a Slack, right? I don't think we were ever on Telegram.
I don't think we ever had a Telegram.
So it's probably not us.
I don't think it is us. Yeah. So and Darvin, there are just so y'all know, there are a lot of spammers and scammers out there in any kind of finance space. So we do have a report spam channel so we can get rid of them, because we our goal is to help people make money and just help people in general, and we spammers and scammers are the opposite of that. So our goal is to get rid of them out of our Discord. So if you post in the report spam, or I think they don't have a scam or spam channel, we will ban them because we hate when people do it. Yeah, so I think that Telegram might have been a fake Telegram. If anyone asks you, definitely feel free to ask myself or Pookies or any of the other shot callers, or Nikki, or anyone who works here, basically, with PB alerts, any of the guides. If you see something that might be sketchy, like someone's like, if you send me some Bitcoin, I'll send you XYZ back, or anything like that, feel free to ask us, and we'll let you know if it's if it's real or not.
Yep. And I will tell you right now, any and all purchases, maybe if they want you to join for free and stuff like that, that's fine. I get, people just get tricked sometimes. But if anybody ever asks you for money from us, all of our purchases go through our website, and we only have one subscription service. So we're not going to ask you to PayPal us. We're not going to ask you to send us crypto. We just don't do that, and that's intentional because we don't want that kind of confusion or people potentially being ripped off. We have had some members get ripped off in the 5-digit range by just clever bots and not paying attention and stuff like that. So that's why we have that post every couple of hours in the events and updates channel, saying to be careful and just ask us first. But if you're not going to this products page right here or any one of those 6, feel free to check with us because we're fully in control of our stuff, and we don't want you guys to get ripped off or tricked. So hopefully that helps. But I don't believe we've ever used Telegram, just Slack. Okay, so sorry about that. So what do I look for trades? Are you referring to how I trade or how I trade the alerts? Because there's a big difference.
Let's do how you trade the alerts.
Okay.
Because that's what a lot of the members are. They're trading the alerts. Especially for maybe like I know you've been doing this for a while. You have all your custom indicators and all this and that. But like for someone who doesn't have all that, like how would you look at these alerts and look into getting into them and possibly setting exit points?
Yep. So the first thing there's a couple rules that I like to follow for myself, and this is all I've done on this small account right here. It's at 10:53 right here. Today was a little bit of a pullback day, but overall I'm up, so I don't really care. And that's kind of the goal here, is that you are going to have losses. You can't avoid them. Everyone is going to experience losses. It's how gracefully you can handle them that will determine whether or not you will be successful. So don't worry about taking losses. They're going to happen. The goal is to put yourself in a position where those losses don't hurt you and that your wins will outperform them. Okay. In the beginning of the year, we decided to take a pretty drastic approach to the way we alert things and the way that we communicate with members, so that hopefully a lot of that risk management and the heavy lifting will be done by the analysts, so that you guys aren't kind of stuck trying to figure it out on your own until you get the education. So when I'm looking for alerts, and again, this small account right here, I got a couple of rules. First is no more than 10 positions at a time, and I'm not using any more than 10% of my portfolio for any position. So in that case, it's $1,000 account. So no more than $100 per position, up to 10 times. That's $1,000. Okay. That automatically keeps things balanced, and it makes it so I don't overcommit. Okay. So that's rule number 1 for me for risk management. Rule number 2 is that I don't take anything really, or I try not to take anything that has a less than a 1.5 to 1 reward to risk ratio. So in this case, this one has 1.48 to 1. That's fine, in my opinion.
Close enough.
Yeah. And if you're new to the site, okay, you're going to want to click the alerts tab right here, and then you're going to want to click alert feed settings. I'm going to hide all the closed alerts so that there's less on my screen. I'm also going to disable everything other than swing trades because I want to simulate being a new trader. I'm also going to change the alerts per page up to 20 just so I can see more. We do have this pagination thing, so you can go to the next page and all that. Okay, so this leaves me with a list of all the open stocks, the open stock swing alerts, I should say. If I'm a day trader, I'm going to change that to day trader. If I want to do both, I can do both. That's fine. We also have stocks, we have options, and we have a crypto section.
And really quick, if any of the members, premium members or even free, have any questions about this system, definitely feel free to ask, because this is a huge tool that we definitely suggest for people to use, because it makes just filtering, as you can see, filtering through the alerts so much easier when you do your daily or nightly due diligence. You can go through kind of what we're about to do right now, go through all the swings and see which ones fit your plan, which ones don't. These are all the ones that are open, of course. So yes, this is great.
Yeah, absolutely. And so we try to do this in a way where there's enough information at a glance to help you make decisions. And then if you want to dig down deeper, you can, but you don't have to. So if I'm just looking at these stocks really quick, say it's the end of the day, I'm tired, I don't really have a whole lot. I'm just going to delete this watch list right here because I already had some stuff on there. But let's just say I'm brand new, just joined, tired, don't know how to trade, blah, 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 right? I'm going to go in here. I'm going to set up my filters. Okay. And then I'm just going to go top to bottom and just look for things that I can identify, right? Because we have kind of a golden rule here. It's trade what you know and study what you don't, right? So if I'm looking at this right here, maybe my account's too small. Maybe 10% of my account is less than this amount, so I can't take this one. So that automatically tells me I'm not going to touch this one, right? You can also filter out by price range and stuff if you want, but that's later. Any updates and stuff you're also going to see right here. So if I scroll down to maybe this one right here, right? Amy's got a couple alerts on there, just kind of letting people know how she's approaching it. Like this one here, first target hit, and then less than a minute later, she says she's selling half her position there, which means she's going to keep half, right? So you know she's holding some to target too. So you always want to check those alerts too, just to make sure something already didn't run and hit target and stuff like that. If it's a closed alert, let me just show you guys this real quick. If it's a closed alert, it'll automatically be collapsed by default. And then you can click on this and it'll have that kind of glossy effect and it'll say the alert's closed. So in that case, we don't recommend trading those unless you're maybe more experienced and you're okay with that. But if you're new and maybe you don't have the experience, all you got to do is just add these to watch lists. So I'm just going to type OXY. That's the first one. I'm going to right click on it, add it to a watch list, right? And then I can collapse that. I got PEP and BIOR. I'm just going to do a couple of these. I'm not going to go through the whole process because I know that takes time. And BIOR, add to watch list. I'll do one more. So I got that one, and then CNC is another one. Okay. Okay, so I got 4 of these set up, and you can see on the website here, the charts are pulled directly from FinViz, and you can see that there are some trend lines and indicators already on there. So I could tell this one, for example, is a nice channel trade, and it's in the lower half of the channel. Looks like it's dealing with this maybe 200, or no, that's the 50 EMA on this one. Sorry, SMA. But it looks like we're about to get a cross up here. So there's plenty of potential on this one, in my opinion. At a glance, right? I haven't dug into this company. I haven't looked at financials. I haven't looked at catalysts or anything like that. I just, at a glance, I can tell that I can identify this type of setup. Okay, so it's worth looking into for me. I don't have to do it right now, but I do have it added to a list, so I can always come back to it. Next thing I like to do is just copy this stuff, the whole thing. Oops. There we go. And then when you're on Webull here, you can paste this right into the notes and save it. And then that way you don't have to come back to the site, right? Makes your life a lot easier.
There's some alpha right there.
But more importantly, you're plotting your levels here, and then you can just draw lines. So if I just, again, just drawing it out real quick, I'm just going to draw 4 lines. Okay, my stop loss is going to be this number right here, so $59. Okay, entry, that's going to be $63.95. Okay, target 1. That's going to be 71.25. Okay, and this is the only one I'm going to do this on because I know it takes a while if I do them all. And then target 2 is $72. Okay.
Really quickly, just a quick interruption, not introduction. We already did that. But Cloudy Pharmaceuticals is asking a really good question, and some of those people who are watching might not know how the portal works.
Sure.
So they're asking how to get access to that PB Alert site or to the portal. So a quick question off of that, Pookies. Free members can access that as well as premium members?
Absolutely. You'll have fewer alerts because you're a free member. That's it's intended to sample what the premium members get. But the free alerts are just as potent. They're literally just copies of the ones that we get in premium. Basically, when an analyst creates an alert, they have the option to make it a free alert as well, and that just makes a copy of it for the free members so they can also follow along. So the ones they're more confident in, or maybe they're a little bit slower and easier to trade, they try to make those the free ones so that you guys can have some.
And so they can just go right into pbalerts.com and log in with their Discord account?
Yep. You can sign up. When you go to the website, it'll say sign up right here. You just click that, and then you can click. I'll just show you real quick. It's probably easier just to do it that way. I'm just going to log out. So when you go here, you just hit sign up. If you have a Discord account, just click this, and then it'll bring you to the authorization page. You just authorize, and it'll create your account for you. And I'm actually working on ripping out, literally gutting the user model and the way that our authentication systems and everything work right now. The previous developer had some difficulty doing it the right way, so we're gonna do it the right way. Oops.
Yeah,
So
for
that's
those
been
for those who don't know, like we were saying before, Pookies is our developer, and maybe at the end of the stream we can do some behind the scenes alpha as far as what we're going to be, some of the things we might have in the pipeline.
yeah, maybe.
Maybe.
Um,
I'll pry it out of him, folks. Don't worry.
Yeah, so you can see this one right here. The upside is 11.42%, downside is 7.74%. So obviously, if I take 5 of these trades and I win 3 of these, or if I win 2 of these, I'm allowed to lose 2 or 3 of these and I'll still be net positive. So that's the advantage here of having a good reward to risk ratio. And that's why we kind of do this. It's all built in. And fun fact, you can actually sort by that. So if you go to the sort by box right here, you can do that and it'll show the highest to lowest. So 3.5, 3.0, 2.33. So if you're someone who prefers just to try to maximize things, it doesn't necessarily guarantee those are the ones that are going to hit, but they definitely have the better reward in exchange for the risk that you're taking. Obviously, you still want to max your entry price to your trading plan because you don't want to exceed your first buy and then have that potentially fall on you. So, so if I had to summarize a couple of rules here, well, sorry, I'm getting ahead of myself. So let's backpedal here. So once I go through this list, right, once I've identified all the ones that I can see at a glance that might have potential for me and I might know how to trade them, I'll add them to this list and filter out the ones that I don't like as I go. So in this case, if I want to look at PEP, right, just as an example, I do like this one. It's curling up nicely. I know that there's likely going to be that 25%. Oh, it's past that. Safe part of that trade's over for me, so I'm just going to wait. So if I go to PEP, I'm just going to type it in here real quick. And I click this right here, it's going to bring me to FinViz. So it's a straight link so that you guys can access this stuff. I have a browser add-on that kind of highlights some stuff that I like and color codes it, but the concepts are the same. You really just want to look for what you can identify and trade with confidence. So on this one, you can see there's a nice solid trend line right here, support line, and it's another channel play, right? It's staying between a resistance and a support line. We came near the support line and we're pushing back up. We got abnormal volume here, so that's pretty good. Good institutional ownership, low insider ownership, which is not a deal breaker, but it's just something we want to keep an eye on. One potential red flag for this one for me personally is this heavy dilution. It's 1.38 billion shares. So that means it's going to take a lot to get this thing to move. Another red flag, obviously, is the current ratio, quick ratio, both being below 1. That just means that they don't have a good cash to debt position. They do have a good forward PE and a PE. They're over 15, which is fine. Don't worry if that's too much or too fast. That's just kind of highlighting some things that I personally like to look for. Another thing is that their earnings are coming up in February. So this is probably what we're just going to look for, is just a quick pop up to that resistance line.
And for those of you listening who's like, wait, what does that all mean? We actually do have a class in the works by Swinging Bull going over kind of this, like it's going to be like FinViz 103, basically going over what all those terms mean in very, very, very detailed form. Because I know we have a few, we have like a FinViz 101 and FinViz 102 class, but this one's going to be the more advanced one coming out soon.
Yeah. And this is a much bigger, more stable company. It's Pepsi, right? It's not a biotech company. It's not some mom and pop contact solution delivery service or something. This is a well-established company. So in trend, that's usually a much safer trade over time. These kinds of patterns definitely tend to hold up better on the larger stocks. But again, if you can't afford that, you can always try fractional shares, or you can paper trade it just to get the experience. You don't have to take every trade, and you don't have to take anything that violates your trading plan. So I might, like I said, I'm going to skip on this one, right? Personally, for now. I see the potential there, obviously. Currently I have 10 in this account, and it's above my my max position size. So there's no reason for me to buy this.
That's important to note, though. These alerts, they have great setups, but it doesn't mean that every single one is going to be, great for you as a person, personally as a trader. So, it's really important to note that, Pookie, veteran trader, he can see this setup, but he realizes I already have, A, I already have a lot, and B, this is not the type of setup I'm willing to, be taking, which is, very telling, when it comes to trading, because everyone thinks that, I can get every single alert, and that's definitely not the case.
No. I mean, I do have an account that has a ton of positions. Got, I think, 120 last time I checked, but I'm still only actively managing 10 of those at a time. I'm taking the 5 top ones, 5 bottom ones, nursing the bottom ones back to health, and trimming the top ones, and that's all I do. I can't focus on all 120. I will go crazy. And more importantly, I'm taking the profits from those and I'm reinvesting them elsewhere. So I'm not giving them right back. I'm not letting them sit in there. I'm churning them out and moving those profits into other passive growth avenues so that the money keeps working for itself. But that's a little more down the road. I mean, not everyone's here to grow their portfolio. Some people just want to make some cash. So yeah, I mean, step one is obviously look and make sure it's in your price range. Make sure it's got a decent risk reward. Make sure you can identify the setup. That's probably the most important part, just because trading is a very dynamic process, and if you're not sure how to trade the setup, you might not know whether or not it's worth staying in or bailing maybe a little early to kind of minimize that loss a little more. Or if it's prime for continuation, you might not know that either. So there's no point in trying to guess. We don't like guessing. We don't like trying to anticipate. Just wait for something to happen. And to get back to the original question here, how do I identify things? If I were to trade this myself, I would obviously identify the setup first, which is a channel trade, right? I think that's pretty clear for everybody. And then you're looking for a couple things to happen, right? So since this is a channel trade, it's an up channel. We got higher highs and higher lows, right? This is a technical uptrend. What I'm looking for is a validation of the bottom. And this is kind of where a lot of people really seem to enjoy me breaking these things down. So I'm not going to do it in super great detail today. But
Do it.
let me see. Did I do it on Ride?
Whoa.
Yeah, there we go. This is how I was sharing my.
This is how Pookie's brain works.
Yeah. So this is the pattern that I'm looking for right here, right? I see well, let's just go back in time, right? I'm just focusing on this right side here. You can ignore all this stuff. It's a little suspension bridge situation there. So when you see price moving up or down, you don't really know what's gonna happen, right? And that's the cool part about trading is you can suck at guessing, right? Because we're not guessing. You don't need to guess. You just need to be prepared. So if you see a single candle, right, a lot of people would be enticed to either buy or sell based on one candle, and that's scary, right? That's what impulsive people do. That's what gamblers do. We don't want to do that, okay? Because we don't know if that one candle could be the top, a bottom, anything like that. There's no context, okay? This is really what makes IPOs so dangerous. Then you might see another candle, like maybe it's down 2 days in a row. People are like, oh, I'm going to buy it here, right? Because it's down further. They think it has to be the bottom. It's more due to come back up. And then it goes down again, right? And this is probably because people who bought this day got discouraged and wanted to sell off and maybe reposition, right? And then what happens is it starts to go back up after you sell, right? What I personally prefer to do is I like to wait until I see at least 2 candles on the right and 2 candles on the left at a minimum before I consider something a bottom, right? Or a low, I should say. This keeps us out of trouble a lot of times because we're not trying to guess on this one or this one or this one. Because if you look at any trend, okay, let me look at Clearfield, for example, right? You don't know which one of these red candles is the bottom, especially this, right? So this is very dangerous, right? You might say, okay, here's the support level, 1, 2, 3, maybe this is the bottom, right? I might buy it here. And then what happened? A bunch of people bought, a bunch of people sold, and it went down farther, okay? What I can identify here is this candle as a top, this candle as a bottom, this candle as a top, or maybe this one, I guess. This one is a bottom, this one is a top. All the candles in between I can ignore. That takes a lot of the noise out of the mix, and that seems to help most people once they realize that, because you're only paying attention to a few items here. And more specifically, if we go back to Ride, you can see that we're not just looking at the validations of those highs and lows, but we're looking at them in relation to one another, right? And this is kind of why I was sharing this stuff with a lot of the members. If we look right here, right, you can see we've got a high here, we got a low here. There's no context there, right? We just know that it's a high and a low. Here, we have a higher low from this one, okay? That doesn't mean anything, right? In order for an uptrend to happen, we need a higher high, then a higher low, then a push higher, and continuation of that, right? So that's what we get here, right? We get a higher high right here in comparison to that one. Then we get a higher low in comparison to this one. and then we get a bullish push. So the entry here was above this high, and this was your low that you can identify. You waited for it to form, you identified it. So right below that, you put your stop loss. Hit there, and then you just find 1.5 to 1, ideally, right? Make sure there's no major historical support or resistance levels in the way. In this case, we had a nice little gap here that we could fill, and it was a beautiful trade. Is this always going to work? No. But the idea here is that you have a greater reward to risk potential. So even if you're only right half of the time, you'll still be net profitable, or even less than half. And the other advantage here is that you're waiting until the price is already moving in the direction you want it to go, rather than trying to anticipate and say, oh, it's going to pop up here. I know it. I can feel it, right? Feelings will destroy your portfolio, and then that portfolio will destroy your feelings. So it's a cycle. So the best way we can kind of avoid that is to not put ourselves in that position in the first place. With our older strategy, we used to build positions down. So I would combine this with another layer, saying it has to be, if this was a buy and this was a buy, I'd want them at least 10% apart. And then I'd only do that, 10%, 10%, and just kind of build it down to lower that average. And then when I see that big reversal, add the rest of my position, ride it up, reduce it at break even, blah, blah, blah. That's a little bit more of an advanced strategy. And that's kind of why we, sorry, I was just reading a DM. That's why we kind of deviated away from doing it that way, because we wanted to make sure that the members, especially newer traders, didn't have to try to figure that stuff out on their own. So now we're basically just waiting until stuff like this happens, and then we're alerting it. So if you look at, let me see here, let's just grab one. Bax, right? So if you look at Baxter, it's a downtrend, right? There's lower highs, lower lows. There's really nothing to trade here other than this bounce, right? Because it's still an overall downtrend. We're trading counter trend, which tells me maybe I don't want to trade this one, or maybe I want to use a smaller position for it, or maybe I want to move my stop loss tighter, or maybe take profits a little earlier. The targets and stuff, they're recommendations. They're not hard and fast rules. So if you're comfortable taking profits at 5% every time, you're not going to go broke doing that, as long as you make sure your losses are smaller than that. So in this case, the lines here are $45, 52 and 56 for the targets. So we're anticipating a good run up here because of these gap downs, right? And there's good strong volume here. The tide has turned pretty significantly. You've got an ebb in volume, so when it resurges, it should run right up into this. Should, right? But most new traders are only prepared for the outcome, which brings them an immediate cash profit, and they're not prepared for the rest, and that's where they get messed up. So that's why we have a stop loss in place, and that's why we're going to respect it. Came within 25 cents of that stop loss, but it didn't hit, so I'm okay with that.
I think a few more of the classes we're going to be adding to the, now that I'm just hearing you talk about this, to the premium section, and maybe some for the free, but definitely premium and alumni section, because we want to build that out a little bit more. As far as education goes, is just the different setups like this, so that people can, because now we know how to look at all the different stocks using the portal, the ones that are open, for the due diligence. The next step is figuring out, all right, now what am I looking at as far as the different setups go? So I guess our next goal, from an educational standpoint, is then teaching our members what all these different setups mean, and then how to determine if it's, what the shot caller is looking for, and then if it's the right play for you as, your personal, as a trader.
Mm-hmm. Absolutely. And so this is also a bullish divergence setup, a classic bullish divergence. So when the RSI gets over 50, we should anticipate some volume to continue to push this. If it doesn't hit that, of course, that's going to provide some uncertainty, and people might sell out and stuff like that. So it'll be a little tougher to climb, but just knowing things like that.
I'll be honest. I doubled my account in a month and a half, strictly using just RSI divergence, and I think stupid, like just past trading. Like I think that's the only indicator I use. I was like RSI divergence and just past trading patterns. I looked at it as a let's try to trade the emotions and then use the divergence to determine that. It was actually after you taught me something during one of our streams like this. I was like, you know what, that makes sense. I'm gonna start doing that.
Yeah. And that's because you understand what divergence is and what it represents, right? It's a shift in trend strength, and you can identify that by comparing the lows or the highs in the average gains over average losses over a given look back period, blah, 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 right? We don't care about math. In the advanced section, I do walk through exactly how all this stuff is calculated, and kind of give you the keys to the kingdom here. You can actually calculate at which price, within a reasonable tolerance there, this is likely to break over 50 because you understand the formula. So if you're a math nerd or a programmer like me, you can figure that out ahead of time and then just set an alert for that level and then place a buy with a very tight stop loss.
Is that the RSI divergence in like PBA class?
Yeah, I think it's class 20 or 21. There's 64 of them. I don't remember.
I think that I put that in the alumni classes area. So for you alumni out there, you're lucky. You actually have access to that as well.
Yeah, and there's it's not just the RSI. It's any momentum oscillator. So MACD, KDJ, stochastics, all 5 of them. They all do the same thing. They just do it in a slightly different way. So we can use them the same way though. Yeah, so this is what I'm watching. But again, it just boils back to that original point. I can identify this. I know exactly what I'm looking for. So when I see something violate that expectation, I could just get out of the play, or I can move my stop loss up to manage the risk. I don't have to be blindsided because I didn't know something. If you can't identify stuff, that's okay. You don't have to trade aggressively. You don't have to trade in a super technical way. I mean, you can literally just wait till the stock is moving up and make sure it's below the entry and just place a buy.
Honestly, for divergence, I love divergence because it's basically, the stock price is doing one thing and the RSI is doing another, meaning like the stock price shows you a lower low, but the RSI is not getting a lower low. The way it's like, obviously it's not like, oh, time for reversal, bull market, whatever, but it's
an opportunity.
It shows you an opportunity. And I kind of see it like a ball, like you drop a ball and it starts bouncing and it gets, the ball bounces less and less each time. Well, then all of a sudden the ball just like bounces higher. Like that's abnormal. It's like, so, and obviously that doesn't happen in real life, but I always look at it like that. It's like, oh, why did the ball just do that? Let me look into that. And I'm not going to obviously, take every trade, like you said. Really quickly though, I do want to get to a few questions. There was one.
I want to answer Devastators.
Yeah, well, no, I promise Anna. Anna asked a question like a while ago. They've been here the whole stream. Just really quick, the SPX. They're asking, what is SPX AM option contracts? I bought one last Friday morning, and the market was good, but I was unable to sell. And Monday morning, it disappeared from Webull.
Interesting.
I'm going to put that in the chat for you as well, just so you can see it.
Yeah, so SPX is it's a much more volatile version of the SPY, the S&P. So if you're trading options on this, I would be very, very careful. This is what Patrick trades. They're leveraged, I believe. Basically, this is the SPY on steroids, and the SPY is the #1 culprit for people blowing up their accounts. So if you take something like that and you layer more and more risk on top of that, you got to be really careful, and you have to be very familiar with your interface and identifying things that could potentially go wrong. But Patrick has also managed to buy his second house, so he's figured it out. And the same concepts apply, right? This is clearly an uptrend. We got a nice support line here. We got a trading range, a distribution gap here that it likes to oscillate between. And if we break this down to lower time frames, you can identify trends. Actually, I think I did this with Patrick one day. You can trade these a million ways. You just have to factor in the fact that you're trading options and they're leveraged. So you need to make sure that you're aware they're going to move a lot faster and a lot more violently, and they might not always reflect the price action because there's also IV, implied volatility, and that's the volatility forecast for a contract. Sorry. Basically, that's just a way of saying how many people might be interested and how far it might run, right? That's going to change constantly. So with that, the Vega changes for every 1% change in IV, which means if you get a 100% move in IV, you're going to add 100 times the Vega to that contract's value or lose it. So if you can't identify the Greeks and you don't know if something is, sorry, I have AIDS apparently. If you can't identify if something is overinflated or maybe there's very high IV and you get something called an IV crush, which is where the implied volatility just flattens out, you could lose a lot of money really quickly. So it's good to trade. You just have to be very, very careful if you do. Hey. Mhm.
For those of you watching on the stream, and I'm muted in the Discord, we have Anil asking us a question in the Discord right now. That's why it's quiet.
Mhm. That could very well be. It might be just intraday contracts. I don't personally trade the SPX. I know Patrick does, so maybe that's a question he can answer. Yeah. No, that's fine. That's good to ask those kinds of questions. That's something I don't know, so I can look it up and learn. And I try to learn something every day, so I appreciate it. That's my guess, though. Is maybe it's just an intraday contract, a higher what's the word? A higher frequency contract. So, I mean, yeah, they may very well. Oh, go ahead. Yeah, he said he bought one and it expired before the expiry. Gotcha. Okay.
Pookie, just for those watching, just like quick 10-second summary of what just happened in the because those watching on YouTube and Facebook are asking. We do have our Discord open for voice chat in the Discord. It's open for alumni for this stream. So Pookie's really quick, just like 10-second recap of that interaction.
Yeah,
No.
so,
And Prime Patrick, no, we want people to be asking questions.
how dare you, Patrick? No, so he was just saying that he doesn't typically trade the SPX AMs either. And he was saying that the premiums tend to appear lower. So a lot of people get tricked into buying them. But he said they expire every third Friday of every month. So he doesn't trade them.
Gotcha.
And that the bid ask is very far apart. So it's very hard to get correct or accurate fills, I should say.
And we were talking about divergence. Devastator did ask a great question. I know you wanted to get to it about they're asking at what time frame do you find divergence is most effective?
That's a trick question. So the only correct answer here is that there is no correct answer because momentum oscillators, specifically the RSI and the MACD, are relative to their time frames. So what that means is that if you look at the way the RSI is calculated, the default setting here is 14. So what it does is it takes the last 14 candles, it adds up the green candles, and that's the numerator for the fraction. And then it takes the red candles and it adds those as the denominator of the fraction. And then it just divides the overall profits from the overall losses of those candles and then renders that as a ratio bound between 0 and 100. So it doesn't matter if it's a 1 minute time frame. It's still going to look at 14 minutes worth of data. If it's 14 days, 14 daily candles, you're going to have the same representation of that data. But it's going to be stronger on higher time frames, as Top said, because you're just incorporating more data. So it's relative to the time frame, but higher time frames always tend to be stronger. So that's, I think, the happy middle ground there between those answers. But there is no best time frame for it. You just have to be aware that whatever setup you're looking at, it's valid for that time frame. So I can't look at the 1 minute time frame, for example, and then try to trade a setup on the 15 minute based on that setup on the 1 minute, if that makes sense.
A quick question from the Facebook from Ronnie. They were saying, I was on the website earlier today looking for the Rest and Retire. I didn't find them. They said they are subscribed to the Rest and Retire newsletter. So how does one get access to, just for people watching, know what Rest and Retire is and how to get access to it?
Yeah, so Rest and Retire will be accessible if you go to your dashboard, assuming you're logged in and you have the subscription and all that good stuff. You'll see this block right here, Rest and Retire, and you just click on this card right here. We are working on refactoring this so it's a little more apparent. But if you click on this, it'll bring you to the most recent article. If you're not authorized, it'll ask you to validate your credentials and all that good stuff. But yeah, that's the link to those articles right there. You should also get an email. We're also in the process of ripping that out. So if you haven't gotten any emails, feel free to open a support ticket, and then we can look into that for you. Preferably on the Discord so that we don't lose track of it.
Right. Yeah. So if there's a tech issue, like Pookie said, that's how you should be able to get access to it. If you are having trouble, you can definitely make a support ticket, and our amazing dev Pookie's Revenge, who we are
And
blessed with, Ed Nate. We're blessed that Pookie's here as a educator, back as an educator again for an hour or so.
Yeah.
But yeah, he'll be able to him or Nate will be able to fix that for you. And yeah, for those who don't know, Rest and Retire is our longer term plays. We
Dev work.
there's a dev work on the screen. It's a longer term plays, and we kind of focus more so on, like I said, like the retirement alerts, because it is good to diversify your portfolio, have portfolio management in mind. As always, I know Prime Patrick's in the stream. He's just like me. He loves the YOLO. I have my YOLO account. I have my speculative accounts where I trade my, crypto, NFTs, and biotech stocks and all that. But I also do have the longer term accounts where I kind of put those profits from YOLOing into, so that I kind of humble yourself a little bit,
Yeah.
So that's Rest and Retire for you.
Yeah. And again, some aspects of the services we have are still kind of suffering the effects of our previous developer. So if you are experiencing any kind of technical issues, please let me know. We're kind of doing incremental refactors along a lot of this, and I gotta thank the shot callers for being patient, because I know that we have a lot of changes, and we've thrown a lot of curveballs at them, so they've been handling it very gracefully, and I appreciate them, and you guys as well. I know there's been a lot of drastic changes to the Discord, to the website. It's just unfortunately, it just takes time, and that is the finite resource here, is time. So we're working on it, I promise. So one thing I also wanted to kind of mention as far as trading rules for myself, this is a perfect example right here. So towards the end of the day, I convert all my bracket orders to limit sell orders. That way I know that they'll fill if the price goes up, or they should fill, right, if liquidity is there. But this one here hit $18.97, and my sell order is at $19. Rather than fighting at whole numbers like $19, that's a major psychological resistance level, we can pull these down a couple cents. And then when it gets back up to that level, it's much, much easier to get filled at 3 cents off or 4 cents off than it is at that $19 level. Because if you think about it, if this hits 19, everybody who has an order set at $19 is going to try to get filled at $19. Not everyone is going to get filled at $19 unless there's enough volume to push it up past that. So that's why you don't typically see prices turn around right at whole numbers, because people just load up at that level, and they either fill and they just sell it down, or they fill and it pushes through. So I don't want to fight all those people at that level, so I'm just going to move a few cents off. For sells, I like to sell a few cents below. For buys, I like to typically go a few cents above, and then for stop losses, obviously that's a sell, so it's a few cents below. So this is 15.30, so I like to set it at like 15.28 or something like that.
It sounds like you don't like you were saying, the even numbers, or or even in this case the resistance support levels. You want to do it a little bit below or a little bit above. It's almost like you don't want to go and get that brand new game during the first
Black
day.
Friday.
It's like the Black Friday sale. There's a whole line out of GameStop. You're like, yeah, I'll wait until 2 or 3 days from and you probably have a better chance of getting it. This is kind of what that is, but instead of days, obviously, it's I'm going to look maybe 2 or 3, 4 cents down from that resistance level to put my order in.
Absolutely, and that's what it's all about. It's just not trying to fight the market, because the market is bigger than you, and its dad knows karate, and it will beat you up.
Yeah, and it is always going, well, as far as we know, obviously, unless there's some really, if it's basically if it's not here, if something happens to the market, we have a lot bigger problems than our trading accounts. But I always tell people, the market's never going anywhere, so you always have time to educate yourself. That is definitely the key.
Absolutely. And you can see here, CTMX is one of, I believe, Jackal's plays. It hasn't fallen down yet, and it's got this huge gap to the downside, which is why we have a stop loss in place. This is one I didn't convert to a limit sell order. So if this fires up or down after hours, let's say it shoots up to maybe $4, it won't fill the way I have it set up right now. So I need to convert that to a limit sell order and include extended hours. Otherwise, I'm going to wake up tomorrow and be upset that I didn't get filled. I'm just kidding. I'm not going to be upset. But a lot of new traders would be. So that's something to keep in mind.
Awesome. Any other plays that you want to go over? I know we hit the hour mark. I don't see any other questions in the chat, but definitely if anyone has any last questions before we wrap it up, because I definitely want to be respectful of your time, Pooh, because I know you got a lot of I saw all those X's and Y's and A's and B's and numbers on your coding screen over there. We got a lot of dev stuff to do. Is there anything that we can there it is. Is there anything that we can leak to the members as far as some I wouldn't say maybe cool features, but like anything that we have going on in the future that we could maybe leak that, hey, this is in the works, or we have a better system for XYZ possibly coming out?
So better system is definitely the key word there. A lot of people have been having trouble signing up for accounts, buying things, authenticating accounts, linking discords, generally just accessing things. And for the past week and a half, the same amount of time I've been trading this account here, I have been focused solely on fixing that. So a lot of it is parallel development. So I'm building stuff side by side with what exists separately. And unfortunately, a lot of this stuff is just kind of intertwined because of the way he had it set up. So some of it requires a little bit of bypass surgery. But for the most part, this should be ready within the next couple of days. I'm shooting for tomorrow. If I can't get it done tonight. So then that will hopefully make things a lot smoother and easier for people across the board.
Awesome.
We do also plan on refactoring a lot of the products and the subscription model that we use. I don't know if I'm allowed to talk about that, but
do it. No one's here. No one's listening. Let's give the members the alpha.
Yeah, so we got a lot of big changes. Obviously the first of the year was the first big step, quote unquote. We have a lot more big changes coming, and it's all for the betterment of the community and the services that we provide for our members, because everyone's back to work. You're not all here just to hang out. You guys want to make money just like we do. And by we, I mean as traders, not as business owners. I know one thing that I'm personally excited for, but it has to be pushed back, is more interaction on the website, such as real-time notifications for when alerts pop out. So you guys don't have to sit here on Discord. I like that. We're also going to have some, things like friends lists and chats and, member comments and stuff like that on the website when the time is appropriate. We can't do it right now. Otherwise, the Discord will become a ghost town. But there's a couple of the systems I have to fix before I can get to that point. We've got a lot of exciting things, different alert types as well. You guys see that we've got some setups here for like spread alerts, multi-leg alerts, stuff like that. We got to finish fleshing those out, and then we'll have those, and just some pretty cool new services we're gonna have pretty soon.
Yeah, the goal definitely is, from obviously the dev point of view, is just to make things easier for you all as members, and just smoother and more accessible as far as the alerts go. Obviously, we did change a lot of the alerts, like the way that we do the alerts, to make it easier for y'all. The goal, of course, being to make it as easy as possible for y'all to follow them and make money. From an educational standpoint, if you haven't already checked it out on this YouTube channel, for those of you watching on YouTube, those of you who are not, it's Pennyboy Stock Alerts on YouTube. We have a PBU Lite section being currently worked on. It's kind of just like a basic education, just like stock trading 101 for you. It's just the intro to what we are all about. Right now we have 10 classes. The goal is to make that around a 50 class program, or I guess just playlist, if you will, on YouTube, available for everyone for free. So right now we're 1/5 of the way there. We got 10 classes going from anything between technical analysis 101, fundamental analysis. We go over portfolio management, risk management, diversification, and we're going to be doing a whole bunch more like options trading, crypto 101, the whole 9 yards, the Greeks and all that. So that's going to be PBU Lite. You can check that out in the free trading Discord, or the free trading class area has all those there for you, as well as all of our other free classes as well. I think now we have over 50 different free classes available, and we're also working on building out the premium classes. Right now we have 4 classes in there. That is not going to be what it's going to be looking like when it's all said and done. We actually currently have Bull just posted a video. We're going to be turning it into a PDF and then posting a suit in the premium class section. We have an options chain class, as well as a 3 tools to get you started trading. We put that in like the PBU premium as a bonus class. We have, like I said, we have the Finvest like 103 class coming. A lot more going on as far as the education build out goes. PBU Lite is just the beginning. And you can find that all in the free trading classes. I will put a link to that in the Discord. It has a white heart next to it. But yeah, Pookie, is back to you. Anything else you want? I guess we still have a few more questions.
I did see one by Cloudy Farm Genetics.
Yes.
Cool name. So I just wanted to also highlight this, the importance of understanding trends and the difference between a trend and things like key levels, right? Obviously, uptrend is higher highs, higher lows. Downtrend is lower lows, lower highs. And then trading ranges or sideways is basically bouncing between support and resistance. There's a difference between those setups and there's a difference between trading the gap, the distribution gap between support and resistance levels. So like, let's say you've got a level here and a level here. Price wants to bounce around between them in whatever fashion it deems appropriate. That's much different than trading a downtrend into one of those levels. So think of these as layers that kind of nest into each other. So right here, for example, this is open. It's Open Doors Technologies. It's one that we traded quite a bit. This was one that we analyzed for a short, and the stop loss, once it broke this level here, was then placed right here. At which point it did hit. It didn't really confirm or anything like that, but kind of a gray area. You might have locked some profit. You might not have. That's okay. But if you didn't, and you identified this continuation here because these lower lows, lower highs, and just obnoxious continuation, the only time it really showed any weakness was right here, right? Everything up to this point is lower highs, lower lows. And then right here, you got this inverted head and shoulders. So this is one I'm going to personally watch for a small pop, maybe up to here and then maybe there. But overall, it's just using the levels and then trading the trend between them as separate layers. It's a little hard to articulate, but there's a lot of value in being able to identify both. So yeah, I'm going to wait till that gets like right there and then just... and then it's probably going to fall back twice as hard. So yeah, so the question here was, do you like the 1 month, 3 month, weekly, or day view to decide your channel? So let me go back to, I don't remember which one it was that had the channel. Well, I guess a lot of them did. Oxy and Pep did. Actually, I think Fubo had a nice one, didn't it? No, not Fubo. One of these. I apologize. This guy right here. EVBG, Everbridge.
Jeez, Pook, you don't know every single trade by heart.
I'm sorry. So as you can see here, these targets and stops were pretty carefully chosen. I mean, if you look back, you can see that the level between this one and this one, it has a lot of activity, right? The entry obviously is in the lower portion of that, not halfway, not above halfway. It's in the lower portion, and it was alerted after it showed some strength. So, but if you look historically here, we got this huge gap right here. So that's the anticipated longer term target. But more importantly, these levels are pretty well respected if you go back in time. Now, as far as picking a timeline, you basically want to think of that as Polaroid, right? Or I don't know how many of you guys remember like the older Netscape Navigator and Internet Explorer back in the day, where you had to wait for images to download and it took forever.
Yeah.
If I look at the 1 minute chart on this stock, it's going to look terrible, right? It's just going to be a bunch of dashes and dots, stuff I can't identify, right? There's no coherence to this. Yeah, I can see a general direction here. That's probably really hard for you guys to see because that box is in the way. But there's so many gaps and just, you can't read this. There's no reliability there, okay? So this would be like the pixelated, low resolution picture that you can't quite figure out what it is yet. Then I go up to the 3 minute. I'm just going to scroll over here. It looks a little better, but it's still garbage, right? 5 minute. Still a lot of gaps, a lot of missing information. Not a lot to trade on. Okay, I can't identify tops and bottoms clearly here. There's no trend I can identify. We're getting a little bit better here at the 15 minute, but it's still choppy, right? Like you got a bunch of like floating dashes and it's just hard to read. There's gaps. It's just not good, right? Then the 30 minutes, a little bit cleaner. You can see there's some continuity here between the lines. So it's getting better. I can identify some waves, right? I can kind of see there's higher highs and higher lows here, except for this guy's a lower high. So yeah, it's right. A little hard to read. It's subjective. Go to the 1 hour. It's a little better, right? It's a little choppy, but you're kind of zooming out and looking at the peaks and valleys here, right? You can tell most of the participation is in this range. Okay, so that's a level of value. Maybe kick it up to the 2 hour, and you can now start to see it more clearly. Okay, so you can see most of the price action is right here. So you could even just trade this range if you wanted, but you can start to see that there's some setups here that you can identify, right? You see a trend line right there. That broke. You got a trend line right there, right there, right there. So you can kind of segment this now. 4 hours, much cleaner. You're seeing the extended hours, so you're still gonna see gaps and stuff after hours, but you can see things much more clearly now. Then we go to the daily chart. It's clear as day now, right? I can see everything I want to see. You kind of want to do this with every chart that you look at. I try to pick one higher frame and one lower frame, and I look for the overall setup on the higher frame, and then I look for an entry on the lower time frame. And then that way I can fine tune my entries while still trading with the trend or setup. I don't want to fight against the bigger one just because I see a setup on the smaller one. That's not very profitable. So in this case, I know that the longer term setup here is probably going to be this gap fill, right? Whether or not that happens, I don't care. I hope it does, but I'm not going to anticipate or try to force my will on this stock. What I can see is there's a lot of activity right here. Okay, this range right here, and it hasn't really broken below this level. So that tells me it's a pretty strong support level. It's been tested 3 times so far, with pretty decent volume each time. So that tells me that's a good level that I want it to hold. If it doesn't hold, I don't want to be in this trade because it could fall to wherever. There's no historical data below this point, so I don't want to find it. Likewise, there's a lot of people selling at this level, so I don't really want to hold too much of my position if it doesn't break past this. So the entry here is below the halfway point between that one and that one. When there's good volume, when there's some strength, right? And I want to trade it up into this level. And again, I can move it a few cents down if I want, or move this a few cents down because they're sell orders. But I really just want to trade this kind of range right here. This is just choppy volatility, and I love it. This is much, much different than trading something like higher highs and higher lows, or a cup and handle, or something like that. I can identify this as volatility. Okay. I'm not going to try to see something that isn't there because I see what is here, and that's all I care about. So hopefully that answers your question. So in this case, I would probably look at monthly just to see kind of where it's at overall. Not that great, right? Weekly, still not that great, but you can identify a major distribution gap between this level and, more importantly, this right here. Okay. Just straight sell off. There's no major price data to the left of it, and you pulled back, retested, and fell on a shallow pullback. This didn't hit 25% pullback, which normally hits 9 out of 10 times. So that's a very strong sell-off. So when it comes back up here, it should run right through that because all the people that didn't that didn't buy here are likely to buy here. And again, that's if it happens, when it happens. That's what I'll be waiting for. But for now, I'm not going to sit here and just hold my whatever and hope, right? I'll trade what it's given me. If it does push up higher, that's great. We want to incrementally scale out of our positions and move our stops up so we can let it breathe. And that's another thing that kind of might seem a little mystifying is, so how do you know where the tops are? You don't, right? You're just letting the stock breathe until it decides to stop.
So we have 2 questions. Let me do the first. The second one is a little quicker. Hello, I'm Kayla was asking, are you manually drawing those red and green boxes, or does Webull have a new feature?
No, so I'm manually drawing these. I assume you're talking about this, right?
I believe so, yeah.
TradingView has that feature. Webull does not. So all I do is I have hotkey set up. So I hit Shift R for rectangle, and I just change that, and then I just draw another one for the stop loss.
Oh, you fancy, she says.
I try.
Do we have that? Is that a hotkeys stream that we did, or was that a class that we have? I forget.
It's both. I got the
we do the class, right? Yeah.
Yep.
We do hotkeys.
What you can also do if you're a psychopath, you could just click this. This is the new
What?
it's the new date and price range tool.
Oh yeah.
If you want to measure stuff, or if you're a psychopath, you could just use fibs. Right. So you know that you want a 1.5 to 1 risk reward ratio, which means you need a Fibonacci that's at least 60%.
You can just eyeball it if you're really crazy.
If you're a complete psychopath. Right. So that's kind of a cheater's trick right there, is if you just want to do that.
Kayla says OCD initiated. I love it. Pookie, we got another question here for you. This one's from Darwin. They said, when I tap on the time frame button, shows the minutes, the hours, the day, the month. But then when I scroll down some more, there are entries like 200R. What is that all about?
Yeah. So are you talking about these ticks, or are you talking about something different?
Do you see a 200R?
I do not. I see 233 ticks.
Oh, maybe that. Let's see what Darwin is typing.
Yeah. It might be a Renko chart, which might be 200 Renko blocks, which is it's kind of like ticks. So ticks is information directly received based on transactions. So when I see one tick, as an example, every time there's something that fills on the time and sales, it's going to appear as a dash. Okay. For a Renko chart, it's more about price levels being broken than it is transactions. So they're both independent from time, but a Renko chart might be from this to that, and then from that to that, right? It's just basing it on the prices that the stock hits and where it exceeds. It's a little more complicated than that, but that's the general essence of it, is that ticks are transactions and Renko is based on price movement independent from time. So hopefully that makes sense. If it doesn't, I can explain it later.
I love it. Do we have any other questions there?
Our cult will be bring your own Kool-Aid, because this economy.
The Pookie's Revenge cult, as hello Kayla says in the chat. King Tone and Pookie's, like I said, whenever you're ready, you can cut us off. Like I said, I'll be respectful of your time. I'm just going to keep on asking questions as long as they keep asking them. Kang Tone is asking, hey guys, can you explain FVG? Like, I got fed Mountain Dew instead of breast milk when I was a baby. Thank you. I didn't read the question before I started saying it. Fair value gap. Yeah.
Yep. So FVG is fair value gap. And that is basically just when there's a gap, right? And that's why it's called fair value gap. So basically when there's an impulse, like a gap up or a gap down or a strong run, there's an imbalance of orders. And this is kind of what we rely on for things like Fibonacci. Let me just go to a brand new chart that I haven't drawn all over like an idiot. I'll just use this Pepsi one. So when you've got where's my drawings? All right. So when you've got a strong impulse like this, okay, I'm just going to do some stuff, right? When you've got a strong impulse, you want to see a healthy mix of people locking profits and more people buying in when that pullback starts to slow down, okay? Same is true to the downside. When you get a strong sell-off, you want to see enough people shorts locking profit and buyers stepping in as well. And there's two levels here that are kind of commonly known as ideal, right? The first is the 50% level, the other 61.8% level. This isn't specifically about fair value gaps. So I'm just kind of demonstrating the concept of distribution between supply and demand. So, and this is something the advanced kids got many, many ears full. Basically, the reason we like to look at these two levels is that when people buy and it runs and runs and runs, people just keep piling on, someone's going to sell first, okay? When that's significant enough, it'll turn the tide of that impulse and it'll start to cause a retracement. So if you're in a cabin and you walk out, you can follow your footsteps back to the cabin because you're retracing your steps. That's where a retracement comes from. You're just following it back down. You can categorize the length and the magnitude of this pullback right here to assess the mix, the ratio of buyers and sellers. So in this case, it's about a 25% pullback, which happens 90% of the time. 61.8% pullbacks happen 4 out of 10 times. 50% is 6 out of 10 times. So as it pulls back farther, you're less likely to hit these if there's a strong enough impulse. And there's a lot of little nuances like 2% versus 4%, blah, blah, blah. But basically, anytime you see this, right, once you see that 25% pullback, that is a period of certainty that is resolved. Okay. And that just means at least a quarter of the price action has been recuperated or retraced. And there's people continuing to pour in. Okay. So sellers might be discouraged at that point. Buyers might be encouraged or discouraged. You don't really know. But the danger zone is right here between that level and that 50 to 61.8% gap. Okay. This is typically where the fair value lies and slightly below it. And when you leave this kind of thing unresolved, you get a strong, it's a little complicated, but basically when you see a shallow pullback like this, you typically see a higher, faster run and then a harder sell off later. And that's because the people that didn't sell here are selling right here. So that imbalance is being filled. And that's why you typically see gap fills go pretty strong in the future. So basically, there's a couple different ways that this can be created. It's not all about buying and selling. It could be also the bid-ask spread. Maybe it's manipulated, or maybe there's just more leverage on one side over the other. Could be a lot of limit orders versus market orders, broker fills. There's all kinds of factors that go into it. But ultimately, it just means that there's not the same amount of buyers and sellers. And that obviously leaves a gap. And then you can typically rely on that getting filled at some point. Doesn't always happen, but there's enough people that believe in it that it usually does. And that's kind of a self-fulfilling prophecy with an underlying mechanism rooted in supply and demand. So hopefully that makes sense.
We're just joking about you in the Discord about how you pretty much know everything.
Bunch of Judases.
Hello, I'm Kayla was mentioning how like you just kind of like every question is just like without even hesitating. You're just like, oh yeah, here's the answer. Like, oh this, yeah, no problem. I know about this. Like, I love it.
It's you've seen Slumdog Millionaire, right?
Yes, it's like that. No, I love
That's
that.
how I learned it all, but I lost a lot of money.
Well, that's why I love doing these streams with you, Pookies, is because like because I'm all about answering members' questions or helping members learn more. But I am not an encyclopedia like you. I like to need to look stuff up before answering questions. But you're just like boom, boom, boom. That's why I love doing these streams with you, because I can literally have any member ask anything and hey, Pookies, boom, and I don't have to worry about you like
I'm
getting nervous about or whatever.
Yeah, and that's if it's like that SPX AM. I don't know about that. I just don't trade them. So now, who was it? I'm sorry. It was Anil, right? He's armed me with something to learn. So now I can go out and become stronger and more powerful. No, it's good. I always like the challenge of learning things. And if I can help you guys learn stuff by just kind of sharing what I already know, that's awesome. I mean, I don't want you guys to have to figure this out the hard way in the market and lose money if I could just tell you. Like, right. It just seems easier and better for you. Snowflake.
I love the Discord.
Oh, man.
I think I'm going to end the stream. We can stay in the Discord for now, but for those of you watching on YouTube and Facebook, the stream in Discord is also free, so be sure to go check that out. It's discord.gg/pennyboys, I believe, is how you get to our Discord, or you can just check out whichever social media platform you're on. It is going to be in the bio, but I'm going to go ahead and end the stream. We are going to stay in the Discord for another, however long you want to do this, Pookies. But yeah, for those watching on YouTube, Facebook, Twitter, thank you for tuning in. We are going to continue the stream live on Discord. Hope to see y'all next time. But as always, until then, I hope that y'all make some bread.
Yeah, bye. Discord people.